Hi, everyone. I hope you can hear me. I'll let everyone settle into this webinar. I'm Adam Button from Forex Live, and we're going to be talking about macro conviction. And it's interesting, we've just got some data out. The University of Michigan consumer sentiment in the U.S. very soft. So it's an interesting time for data and transitions. And it's those changes in the macro economy that make money and that are the waves to ride that we're going to talk about in this webinar. And, in this one, I'll give you the exact numbers: 67.4 against 76 expected. So 67 against 76, much softer. Although the inflation numbers were a bit higher. 1-year inflation at 3.5 compared to 3.2, and 5-year 3.1 against 3.0. I don't think those now matter as much as the deteriorating sentiment and the potential for a slowdown in the US. I don't love that indicator in general, but this is what we do at Forex Live. We write about economic data in real time, talking about what it means, so you can get in early on these macro changes and macro trends. And what this webinar is about is strengthening your conviction in what is coming next in the market. So you have this idea about sort of being right? But there's never been anyone who ever was right about anything and made money, or really in any field in the world, who made a lot of money without conviction in themselves, conviction in their beliefs, and conviction in what they're doing. And to me, that element in markets is what separates people who do well and people who don't. Because along any journey, there are going to be these difficult moments. There's always doubt creeping in markets about whatever it is you believe in or whatever trade you have. Because on a lot of days, the market's telling you you're wrong. And other people are selling it, and you're seeing red on the screen, and that is going to damage your conviction. Yet, everybody knows that nothing goes straight up. So you have to have this conviction about what's going to happen, despite the world telling you on many days that you're wrong. And that's the path to making real money in financial markets in the macro world. And so this webinar is about finding that conviction and holding on to that conviction, and how there are techniques in that, and there are things that you need to remind yourself in order to get that. I don't even like the image that's up there, because I don't think it's about the screens that you have or the information that you have. So much of what this webinar is about is what's kind of going on in your mind, and the traps that you can fall into, and different ways to sort of beat that. So first, we're going to talk about getting a great idea. Like, have you've had a great idea and then you blow it? That's what this is about. But first is that you can find these great ideas, and they're really not that hard to find. I think if anyone has been in the macro arena for any time, or even the financial markets arena, with any hindsight, and we all have it, think, why didn't I buy Bitcoin 10 years ago, or an Nvidia 6 months ago, or whatever sort of trade that seems obvious in hindsight. We've all had those, and unfortunately, it's not a home run every single time. And the good news is that you only need to make something like that happen, a few times, maybe even only one time in a lifetime, to really get where it is that you want to be. So how have I done that? How have I rode these different waves? Big ones, small ones I'm looking forward to. We're going to get to the end of this webinar, and I'm going to talk about some of the things that I have strong conviction in right now. That really the theme of the webinar, though, is going to be pain. You think about making money in financial markets, and a lot of what you want to think about is the profits, right? I tell you, listen, you can make $1 million on this trade. We're going to talk about a guy who I know made $1 million on one trade, and how he did it. But what you don't think about when you're getting into the trade, and I think this is a mistake, is the pain. To get from A to B, it's never a straight line. especially if these trades are going to stretch out over weeks or months. There's going to be pain, and dealing with that pain is the way to the reward. And you have to recognize how unpleasant it is to be in a position and to be up, 100% and then see that dwindle to 20%. Or other times it's just start behind. And I really hate to start behind in a trade. And it just means the timing is wrong. But it's even worse to have a great trade and get shaken out of it at a weak moment and then watch it go in the way that you thought it would, which is what this webinar is really about, is about your good ideas, things that you believe in, and capitalizing on them. It's not fumbling that touchdown when you're 10 yards away from the goal line, from the end zone. So a bit about me. I don't really want to talk too much about me. I'm a macro trader, do Forex Live. Listen, I'll tell a story about, dumb conviction too. The very first trade I ever made was 20 years ago, and it was the company IMAX. And I just had this conviction that 3D movies at the time and big screens were going to be a winner. The company was pretty cheap. It was going to get bought out. And Sony was actually going to buy it at the time. And so I had my whole account in the trade. Thank God this was before the days of YOLO options trading and everything else. Anyway, they had an accounting scandal. And shares fell 40% in a single day. And so it was a bit of a disaster, and it was sort of this misplaced conviction trade and a lack of risk management at the same time. And then of course it fell another 30%. I wasn't smart enough to dump it on that day. And so you learn these sort of hard lessons in markets about having conviction and over conviction and just this sort of blindness that you can run into. See a little quiz. That was a nice little quiz to start off with things. And anyway, go ahead and answer that. But it was funny because 15 years later, this somehow ended up in a class action lawsuit, IMAX shares. And they, because it was an accounting scandal, it was management lying, and they had a class action, won the class action, and put in the file. I didn't expect to get much back. I actually got back every dollar that I lost. So it ended up being a break-even trade, though 15 years of lost time, I guess, on it and compounding. But that was a nice little surprise. Anyway, the next slide. Sure, the slide's still popping up here. So, the real way to get right about markets is, you have to see things as they are, and then you have to be right. But the last one is really about just holding tight onto these things that you believe in, and around the sort of strengthening and the things that you need to look out for along those. And we're going to get into these kind of 6 principles of number one is seeing right. And this, I think, is a bigger problem that people don't like to talk about in markets, is that so much of what people invest on is the way the world should be, the way they think the world should be. And, you hear people talk about, well, this is unfair, that's unfair. We like to think of markets even as this fair place, but it's not. And I think it's an early trap that people get into on the macro side, is thinking, well, if it's politics, this is unfair, so it shouldn't happen that way. Whatever it is, your military company shouldn't be rewarded for lobbying for war, and yet they are. And this politician is corrupt, and then that corruption shouldn't pay. Well, you know what? A lot of times you just need to invest in the corruption, accept that it's corrupt. And I think, a lot of people talk about Elon Musk as a good example, full self-driving, right? He's getting sued for it finally, but, he built Tesla really on the idea that this was coming for, I don't know, the last 6 or 7 years. And you have a robo-taxi and whatnot. And if you could see right through it, well, that's fine. But, he got away with it. And the stock went up, I don't know, 10,000%. So was it smart to acted on how it should have been, or act that he was going to get away with it. And that is a real trap, that people are getting moralistic about markets and who are the winners and losers based on kind of what should happen. Investing, oil, people dumped all kinds of oil saying, well, we shouldn't have greenhouse gases anymore. It's damaging the world. They're not wrong, but we still needed oil tomorrow. And when oil was zero, people are saying, well, that's fine. All these oil companies should go to zero. And you're thinking, well, I don't know. I just drove past a gas station. People are still filling up their cars. So that is an example of seeing the world as it is rather than as it should be. And really look out for that trap in your thinking. And a lot of times it just comes down to shrugging your shoulders and saying, like, that's the way it is. So that's something to really keep in mind. And it's a lot of those things, those hard truths. The rich get richer. United States does what it wants. There is no grand conspiracy about it, and there's no point in thinking in conspiratorial ways, because I've never found a person who made money in markets betting on conspiracies. So you just believe, and I like to talk about like Warren Buffett. I think he's the greatest macro trader of all time, even though he would say I'm not a macro trader at all. But his single macro belief is that the United States is going to come out on top, or corporate America. And he had this unbreakable belief in America, and that allowed him to step in at times when people were fearful. And it allowed him to bet on really the right horse for his entire investing career. And, there's a lesson in that. It might not just be the United States in the future, but that deep conviction he had. I mean, his dad was a United States senator. He believed in America and everything about it. And that was probably what unlocked his confidence and his conviction in making all the big bets that he did over the last 70 years. And they kept coming up right because he was right. And you could talk about through his lifetime all the things that might have gone wrong in America, all the political mess and scandals and everything else. Yet corporate America won, and he won. So that's the way it is. Next, though, that's the past, is figure out what's coming, right? So this can, we're going to talk about some of my convictions later, but this is really the gist of it is finding this belief. And I really don't think it's that hard to find if you go at it clear-eyed, if you understand that really what matters is the Federal Reserve and the price of money, relative growth rates, who's winning and who's losing. You can find this in different ways. I would suggest just read a lot. I mean, that's the superpower in markets. I will tell you that people don't do the work. I'm reading the speeches. I'm in all the live streams of speeches, and I'll go into them. It'll be like a YouTube stream from the ECB live. There might be 400 people in it, 500 people. That's in a whole investing world. And at times in an important Fed speech, there might be a couple dozen watching it. Now, people are reading the headlines and maybe they're reading the speech. I don't know, but I'm pretty sure a lot of these are Q&As live, that nobody's doing the work. And you hear about investors talking about this all over. No one reads the quarterly reports. Really, the way to get an edge or to find that conviction is just to read. And I think it's harder than ever right now with all the clickbaity news articles, the negativity, the doomsaying. But get out there and be careful of TV, people on TV or people making strong pitches. And I'll tell you, because I go on TV and they come on, they bring me on, they say, Adam, what's happening with the yen? What's happening with the Canadian dollar? Whatever it is. And I'm going to give my honest opinion. But the secret to being on there and the secret to doing it right is just to sound like you have a lot of conviction. Like, this is what I believe. This is why it's right. And there's no doubt this is what's going to happen. And the people who act like that are the people who get invited back on over and over, and they're always on TV. Because as humans, we gravitate towards certainty and comfort. And people, when they offer us comfort and certainty, we gravitate to them. But be careful. I know when I'm saying these things, all the things that can go wrong. Uh, I'm not even betting irresponsibly on any of these things that I believe in. But so be very, very careful of borrowing someone else's conviction. We're going to talk a little bit more about those sort of pitfalls coming up around echo chambers. But the number one way to get conviction is just to do the work. And it's not, and recognize that it's not that hard to find. It's more about strengthening your conviction for the difficult times. And that is about, challenging your convictions. You're going to have something and you're going to read something and it's going to make a strong pitch. Now you have to find the other side of it. You have to know the holes in the story because they're going to come up over and over. If you're in the trade, eventually you're going to see that. There'll be down days. You'll be wondering what's happening. It'll be a different part of the macro economy. You'll be bullish on something, but then there's a war or whatever. And in order to cultivate that conviction, you need to think through a lot of the things that can go wrong. Of course, you're never going to get through all of those, but you have to then within that have this conviction that in the bigger picture, this theme will hold through whatever might happen in the short term. And so, there are times when there's a genuine game changer. You might have a belief and then the world changes. COVID happens, financial crisis, whatever. There are very rare, genuine game changers in markets. I can only really think of about 5 or 6 in my career: financial crisis, maybe Brexit, Eurozone financial crisis, COVID, probably a couple others in there. But other than that, most of them, they didn't change the arc of whatever was happening in the world. So you have to have that ability to look through these relatively small problems that are going to come up. And also be careful of the sunk cost fallacy. That means I've spent, months and months, days even, thinking about this theme and getting ready for it, and I need to make this trade. I've done the work, I should be rewarded. It just doesn't work that way. So, move along and just develop that habit to just keep working, keep reading. And then you've probably have something, if you did, or you learned about something that may come back again later in the next economic cycle. You might know part of this that years from now you'll see something aligns. You think now is the time to make that trade and go back to it and review it and get into it then. And then I think the most powerful question in that sort of thinking is asking, well, what if I'm wrong? How will I know I'm wrong? How will I manage that risk? How are the different ways that I can be wrong? And I like to think about this in terms of Fed speakers. Once in a while, they'll come up and they'll say, I think inflation's going back down, and so on and so forth. And then you'll say, well, what if I'm wrong? How will you know if you are wrong? And obviously, they'll point to the data, but you have to think through, well, how much data would I need to see, or what would I need to see happen? Because it's not enough just to have blind conviction and get blown out of your account if you're wrong. Although I would argue that is better in a lot of ways than getting shaken out of something that you do have a lot of conviction in. So it's always that fine line between conviction and over conviction and stupidity. But the worst to me is getting shaken out of the right trade. Anyway, but you do have to ask, what if I'm wrong? You do have to manage risk. You do have to be looking at the different ways of these macro themes that you're into. And right now, the big question is inflation coming or is disinflation coming? And ask yourself, what if I'm wrong? What sort of data points would I need to see? Okay, Michigan was strong or was weak today. Consumer sentiment. What does that tell me about what I believe? Well, we also had inflation tick up in it. So maybe you have a little something for everyone there. But what comes first? Does sentiment decline, spending decline, then inflation comes back down? I'd argue inflation is a lagging indicator. And then, a lot of what you're doing when you're developing conviction is circling around an idea that may take time, will likely take time to play out. And you have to, in a perfect world, you'd get the timing just right. but never assume that you're going to get the timing right. I like to be early, and I'm happy to take the pain early, especially in small doses. But you want to be able to see some kind of catalyst, either a timing catalyst or something that you're looking for in terms of economic data or some change in some part of the world that is going to start to validate your thesis. Again, the market will take longer to recognize it than you would like, but you have two options. Don't think you're going to get the timing right. You have the two options to be early, and then you have to anticipate the waiting of being early and the annoyance and some of the pain that comes with being early. Or you have to recognize that you're going to be late, and then you're going to wait for a lot of these catalysts to happen and the market to start moving. Now, if you're early, you can make the move in smaller sizes and then add as it becomes more and more clear. I like that feeling because you're in already. Or you can be late and come in stronger. Some of that is about your personality, about your timing profile, your risk profile. Those are going to be different webinars, but no matter how you do it, you want to get the position sizing right. And I even talk about just the last week in markets. We talked about this after non-farm payrolls at Forex Live and the Fed. I was teed up for a dovish Fed. You don't know what's going to happen with non-farm payrolls, but then it hits and it's soft. And you think, hey, look, the whole next week, which is this week, is quiet. Market loves a quiet market. You now have these dovish catalysts. The market had priced in no cuts really from the Fed anymore. And you think, man, this can just drift higher. And that's exactly what's happened all week. And that's sort of a kind of like a medium conviction, quiet market. And it's knowing also that the market loves a quiet market. The risk assets are going to do well in this environment. And, it's easy to say I should have levered up and got crazy long through this, but it was enough just for a week to be just moderately long risk and just watch it come in, steady Eddie. And a lot of trades end up being that. You like to think, wow, I'm going to hit these home runs, but it adds up. This was a nice week in markets, and it was nice to be on the right side of it. So that is the position sizing. Had I gone levered long risk assets, I'm not sure I can take that pain, even from the small dips, because the conviction is just sort of medium in a market like this. Any kind of headline could come out and wreck it. But if you're willing to kind of play the long game, which is always the winning game, then it's sort of a low pain, low gain, but still a gain kind of market, and that's fine. Other times, there are times when there are this like sort of fast money, heavy conviction, big turning points. I mean, it's just sort of one non-farm payrolls report, and the Fed could come out and stomp it, I guess, at any time. So that is a different kind of trade, but other times it's long term and it's a lot of pain, and you have high conviction in it. So we'll get to some questions here shortly if you have them. I'm not going to take too much longer, but these are some of the big traps that people fall into. And the fear is such a powerful emotion, and that is the sort of the hard part. Whatever conviction you have, and it might be for multiple years, it could be very, very strong, but something can happen in the world to make you fearful. And we saw it on Forex Live a few weeks ago when bombs were falling in Iran, this sort of back and forth with Israel and Iran. And the market just got so fearful so quickly. And we're watching it, and I think a superpower in markets and the sort of best trading advice of all time is everything's probably going to be fine. And if you can hold on to that belief that the long history of humanity is an arc that's up and to the right? So your chart's bottom left to the upper right. And that has been true. Almost every place in the world is better off than it was 100 years ago. I would argue that every place is, though maybe someone could find an exception. And so you have to bet on that, but it's hard to be sort of greedy around that because there are very tough periods. But fear, don't let that seed of fear grow, because once it gets planted, it just gets gets rooted very quickly and can shake you out of a great trade. This FOMO, okay, we know the other ones, but there's also this idea of tunnel vision and echo chambers. Now, there's a lot to be said of being around like-minded people. I think some of the great sort of trades or group trades, and it's happening a lot more often right now, are things where people get into a group, almost like a cult, around a certain idea. And if it ends up being a good idea, a lot of these people sort of reinforce their own belief, and it snowballs, and things probably get way further out ahead than they really should be. But right now we're in this collective age of ideas in the internet, and people get together and they create these echo chambers, say around crypto or Tesla, or there's 100 other things, GameStop even. And some of them end up being very foolish, right? But there's something to be said. And why do people like them? It's because there's something to be said about being in a room full of like-minded people that strengthens your conviction and allows you to hold through the trade. And that is very useful. Be careful, though, of creating that kind of tunnel vision. A lot of these ideas end up being really bad ones, that really hurt people. Things that have genuine economic value probably don't go up 100x, in a very short period of time. So you look for sort of smaller examples of that and themes rather than manias. And it is a fine line, but it is worth cultivating. We have a nice group at Forex Live, a chat room, and it's smart people that have ideas and bounce them off each other, challenge them, ask, what if I'm wrong? Other people will argue that they're wrong. But it is useful to watch it play out. And I think that's a tool, a 2020s era tool that you can really exploit. And then the last one on that list is there is always another trade. And that's my mantra. It's something I remind myself of often, because a lot of times you can set up a trade for years, and still miss it. And, that I remember, uranium is having a moment. I don't know if you guys follow that market, but the energy market's very interesting right now. And I was betting on uranium like 2 years after Fukushima, thinking like we're going to have this green transition. We're going to need nuclear power. It's clean. And, it's finally happened. Now it's like 10 years later. So, you sometimes you're in early and you miss it. But there is always another trade. I mean, there are a dozen other ones in the meantime that did work out, that you're a little closer on the timing. And it's okay to be even a year or two early, but 10 years early, at some point you end up throwing in the towel, which I guess I did. I mean, I still have a little bit of, but it could have been, I guess, a great trade. It is funny though. People will tell you all the different ways to make money, and I could sit here and do like a very vanilla webinar on all these boxes that you're supposed to tick in a trade, about risk management and a million other things. But this is a story about a guy I used to sit with, and he just had extreme conviction in this very simple technical analysis. We were in Montreal on a trading desk, and he was a pretty young guy, but he had kind of grown an account. I think it was like a $10,000 or $15,000 account into $30,000. So, great start. But he was just waiting for this one thing. And this is a dollar CAD chart there. And he believed that when it broke 114, it was going to 130. So you just see the sort of full retracement of that sort of earlier move. And he got levered up in CAD futures and sold them on that break. And he straight up made $1 million on that trade. One trade, and then he held it. And if you look at that dip right in the sort of middle of when he bought and when he sold, it was like an 800 pip drop. But the guy's conviction, to his credit, never wavered. So I think it went from like a $700,000 gain to like 200,000, which, is very painful not to get out during that. You look at that chart, it looks, wow, it's a great start, obviously a great finish, the way it worked out for him. But it was, a lot of people couldn't tolerate that pain. And I think you got to be a little bit crazy in my mind, or have insane conviction. Maybe, in another world, it goes against him. So I don't really love that kind of trading. He ended up going to work at a hedge fund in New York, and I don't. Right after that, really, they hired him, and so credit to him. But I don't know how it worked out for him after that. But that, you know, don't let anyone. I've seen people make a lot of money in weird ways, but what they all had in common was a conviction in their beliefs. Some of them, it was a very short term conviction, but in general, people who do well can maintain conviction in a difficult time. And the technique I want to talk about to make that work, one moment, is when you get into the pain, and I alluded to this earlier, is anticipating that trade when you get into the start of the trade or before you go. And one I'll talk about next is copper, and I've been talking about this on Forex Live for a number of years, saying, listen, in the late 2020s, copper is going to get really tight. And it's very hard to open a copper mine. It takes like 12 or 15 years. Druckenmiller is even talking about this now. He's in the trade. And is looking at it a year or 2, 3 years ago and saying, listen, how early can I be? I know this is really probably a 2026 trade, but the markets may move ahead of it, which you can never really be confident in. You know, the risks are going to be like about China. China could do bad. They use 50% of the copper in the world. So that could completely derail it, even though we need all this copper for now, green transition, AI, probably robotics, munitions, which was something I hadn't thought about or counted on. But a lot of these drones use a lot of copper, and other ammunition use it. So it was, do you want to be right? And how much pain can you take? So you're in the trade, you know, in 2022 for a 2026 trade. All right, I'll play the long game. Then you start worrying about China, right? And is that going to shake you out of the trade? Well, if you're sized appropriately, I don't think it will. But you have to anticipate the different kind of pain. And if you put a target date on it, and you say, listen, I think I can ride this out. Everything should be fine. You know, China's not great, not falling apart. But you don't really know with something like China. It's very opaque. It's very difficult to have a lot of conviction what's happening in China at any given point. And I think that's why it's been so depressed, though coming back. But visualizing that pain when you get into it and saying, listen, I think I could probably triple what I'm investing in this trade. It's going to take 4 years. And it's going to be up and down. Now, I think a lot of people, when they get into trading, think 10x, 20x, 100x, whatever, lever. I don't know how well they can work in a long-term trade. Certainly some people can do it. I can't. And so that is how I think of the pain, the pain threshold that I'm prepared to take. It works. So visualize you like to visualize the gains. And when you are thinking too much about those, that is a bit of a red flag. And instead, think about the pain that you're going to have to go through to get there. Okay, well, talk a bit about some of the things I have a lot of conviction in right now. And I think the first one is probably the biggest one. It's the impacts of AI. I've been writing about this for a long time. Is that it is just going to mean corporate margin expansion. Companies are going to make just as much money with fewer workers, be more efficient with the ones they have, and will just improve margins over and over. And that's going to lead to a bull market for the remainder of the decade. And I don't worry too much that won't happen. You know, you're always sort of waiting for the next leg in it to work. But it's real. There's something there. A lot of it I'm thinking about right now is with robotics, and that could be a true revolution if they're able to meld the two together. But ultimately, I think that is disinflationary and leads to just a brighter future, like a lot of technology has. Now, I recognize the negatives that are possible, and maybe it ends in you know, like Terminator 2 or whatever, nuclear war. But until that happens, I'm going to continue to bet on it. And green transition is a very interesting space as well. You know, there are huge investments that are going to need to be made, and I think people are starting to recognize that around the power grid and generation, especially now that data centers are crunching it as well. These old boring businesses of power generation. People are wising up to the difficulty that's going to be around it and a lot of the raw materials that we're going to need, like copper and some of these other ones. And along with that, we still need a ton of fossil fuels. There haven't been enough breakthroughs. Even EVs, people got very, very excited about EVs, but it's not, doesn't remove that much energy, especially if you're using coal to power the electricity that's going into it, like they are in a lot of places in the world. So I believe that comes back to what I said at the start, is seeing the world as it is, not as you want it to be. And I don't think a lot of people recognize that where the energy was coming from when they were plugging in their EV. They just said, well, EVs are going to come in, people won't use gasoline anymore. Well, what if I told you that 70-80% of fuel wasn't even used in automotive transportation, right? It's used in power generation, it's used in aviation, fertilizer. So we're going to need a lot of these things forever. The true US superpower, it's not the 15 aircraft carriers or the nuclear arsenal or any of that. It's the 30-year fixed mortgage. Been talking about that for a long time as well, and it's kept the US consumer strong. Maybe we're at the tail end of that now. I think a lot of that is priced in, but I really think America is just in a plum spot right now. They're flexing the fiscal muscle right now. It's going to be tough to bet against the US dollar. And the last one that I am getting actually increasingly strong conviction is that inflation is coming down. And I think it is the big question in markets right now. And you can see everyone in markets struggling with it. So it's tough to have high conviction in it, but I have a pretty solid medium conviction, and I'm sized appropriately, that inflation is going to come down in the next number of months and starting to turn the corner. And it could, the timeline on that could be, it was obviously early in December to be in on that, but there were still a lot of ways to mitigate the risk. And that's a lot about trade execution and deciding how to tap into that trade. But I believe it's going to improve. So we'll wrap it up there. I'm going to take some questions. And again, even with my ideas, like the point, I don't even really like putting them in the presentation, because the point of this is you need your own conviction. It needs to be able to hold up against whatever someone else believes in. You can't borrow it from somebody else. And also, I love to tell people to stay in the game. I mean, just like Warren Buffett says there, just stay in the game. This is like the best game in the whole world. It's wonderful for personal development. It's very fascinating place to be. I've missed so many trades. I'm here, all these screens, every news source in the world, thinking about opportunities in the world every day. And every day something comes up and you missed it. And it's a little bit painful, but stay in the game and wait for another trade. Your ship will come in. You just have to keep waiting and just stay in the game. So that's all. Yeah, there aren't really many game changers, and it's all about just believing in yourself and trusting yourself. So question, des questions. Let me see if I can see these questions, if we have any, because I got some notes in my way. What we have now, here you'll see some charts. Okay, so here we are. Okay, let me see some question. My view on, all right, I guess I'll start at the top here. Okay. All right, so we had some problems with the sharing the screen. All right, well, that's unfortunate. We'll have to do this again. I'll share those around. My current view on dollar CAD, I'm pretty bearish on the Canadian dollar at the moment. I just, in the long term, I don't see a huge opportunity there. There's just not a lot that Canada's doing right at the moment. So I think we eventually make our way back up to 140. I mean, that one. Okay, take this next one. Okay, my friend in Indonesia. Strengthen. Yeah, the market often moves beyond logic. That's a good point to keep in mind, is that that all the market can be irrational, or the market can be um wow, can be irrational longer than you can be solvent. And that tends to be true. Again, that's that timing and position sizing question. Even if you look at the ebb and flow of markets, you have to sort of guard against that, really, with position sizing, and that's about waiting for things to move in your direction. I mean, eventually markets do get it right. That's the great thing about markets, is you get rewarded for being right. And being early oftentimes is the same as being wrong. So uh, there are times, sometimes longer periods, painful periods, where you can be offside, and that's more about managing risk and waiting for the things to align, or for the market to move in the way you think it should, or probably will eventually go. Um, my thoughts on Japanese equities for years of low performance. Listen, the currency is weak. Japanese equities are cheap. Not really my bag is trading Japanese equities. There's a lot to like about Japan in general, the rest of the world in general. Uh, I wouldn't bet against them, is sort of where I come down. The impacts of AI in trading, it is fascinating to think about. I mean, quants have been doing this since I started 20 years ago. And you'd look about like Jim Simmons, and I don't know how many billions he's made since like the 80s trading as a quant. I haven't seen that many people do it that well. Then again, the people who do, or have something that work, keep it quiet. But then the people who do seem to have had some success often talk about how it suddenly changes. It doesn't work anymore. In the future, is there going to be a way for AI to do it? It is kind of scary to think about as a person. Could we just have a bunch of markets trading on AI against each other? Would that work? I don't think it will, but it'll be an interesting thing to think about. I think ultimately the creativity of your trade and these macro themes, and that uncertainty of the dynamic of a whole globe, is going to offer up opportunities. When I started, it was a wonderful time to be a macro trader, because you could just buy on headlines. Like, the market didn't move quite as fast as it does now. You had a few seconds and there was enough liquidity, or there wasn't enough money in these sort of headline driven quants that it could beat you. So you could see like an economic data point. Canadian jobs was today, it might be strong, and you could just buy CAD, or you could sell CAD bond futures, and you just watched it. You watched the headline come in and you just hit buy or sell, and it worked for like a number of years. So now obviously the game changed. That lasted a few years. I caught the tail end of it. But friends I know, they really, really, really cleaned up just on doing that. Yeah, Canadian jobs strong, buy CAD. And it was that easy for a number of years. If you could make the trade in, like, I don't know, 2 or 3 seconds, like, not that fast. Now it's way, way, way too quick to do that. But it does work with unexpected news in that same way. So you just have to wait a little longer and be ready. But it'll change again with AI. I mean, it changes all the time. So you have to be prepared to kind of do that work. You might have something that works, and the game will change. Yeah, well, listen, Andre, you've got the idea about buying the dips in the S&P 500. Oh, there's a Q&A section. Okay, sorry, I'm not doing this very well. Okay, here we go. There are a lot of questions here, so I'm going to try to get through these quick. I'm into the Q&A. I'm just going to answer this one in the S&P 500, or thinking about it out loud. Like, it really is, like, the long arc of history is up and to the right. And buying the dips. I've never seen bears make money. It really is tough to be bearish and make money. You can sound smart, you can get on TV, but man, people, you have 6 billion people in the world working to make the world slightly better. Most of them are anyway, and bet on those people. Yeah, okay. Well, that's a heck of a trade you made there, Saggy. 1,000 into 170,000. Um, that everybody has a different sort of risk profile. This webinar isn't really about knowing yours. You obviously have some sort of talent for getting some trades right. Uh, you know, the roller coaster that you must have been on with these trades be incredible. What can you do about that? I mean, you just dial down the risk. I think it's that patient. You just show a little bit more patience and recognize that it takes time. It really does. Okay, I got to that other one. Is it better to trade the news reactively or proactively? Good question. I like to reactively is what I'll say. I mean, anticipating news, like say you're going to anticipate a weak non-farm payrolls report, like that's kind of tough. It depends really on how much conviction you have in something happening. If you think like, okay, I know who's going to win the US elections, so then you're kind of proactively positioning for that. A lot of things can happen in the meantime. Where I like to really trade is in the mess of it all, in the mess of it, and that figuring it out a little bit more quickly, I think is the reactive approach that works for me, but maybe it doesn't work for anyone. I don't think there's a right answer there. Yeah, technical now. I didn't talk a lot about technical analysis. Yeah, well, it's this anxiousness, right? Like, so Dennis, you're talking about how do I hold my trades without getting too anxious? And I think the secret to that is just position sizing. But it's funny. I mean, I remember starting out and it would be like a 25 pip trade I couldn't even hold like overnight. And it was very, very low stakes. And that was just who I was at the moment, just way too anxious in that position. But it is like a muscle that you strengthen if you stay in the game. Not much keeps me up at night now in terms of markets. So, yeah, dial it back and wait until you feel more comfortable. Like it's very, very difficult to make money in markets if you can't sleep at night. You're going to that whatever conviction you have will be eroded by that. So you have to have this iron conviction. You have to recognize that making money is going to be very uncomfortable, and be ready for that. And those visualization techniques work, but you're going to be anxious. When you have do you take short-term trades too? What is the risk tolerance each trade, let's say? Yeah, of course. A lot of it's just on headlines. I don't know. I could go on and on about that question. Sorry, maybe I should read these out loud and long-term trades, but do you take short-term trades too? What is your risk tolerance for each trade, let's say? I mean, it's small. The short-term trades are sort of low conviction. Unless there's a headline, I don't trade big. So yeah, you'll have an inkling of what's coming some days, sort of low conviction, low trade. I mean, that's probably about as simple as it is for that. A lot of times when you're adding to positions that you already have, I like to scale in and scale out. How can we know central bank moves in real time? The next question. How can we learn monetary policy? Wow, that's a tough one. I mean, we'll read Forex Live. That's a hard one to answer. There's a lot to learn about central banks, but really at the end of the day, you're just betting on places that are growing. And a central bank will be, the Fed will be dovish when the economic data turns bad, not necessarily when the inflation numbers come down. So that's what you're looking for, is just signs of growth, signs of weakness. And then central bankers eventually reflect that. You need to know the lingo, and you need to know where they stand or where they're coming from, but it's just a bit of a reading to figure out that. So my conviction about the US dollar for the next few months, I mean, pretty high, pretty high. I don't think, this ends just yet. It's been a heck of a bull market for the US dollar. The euro's been holding up pretty well, better than I would have thought. A lot of times price action will reflect back to you what the market, how the market is positioned or what's true. I've always liked to say some of the strongest signals are when a market, gets good news and doesn't go higher. Right? That tells you it's probably near the end, or when a market gets bad news and doesn't go lower, which is for me the strongest signal of a bottoming out process. Right now, the US dollar is still rises on good news. And it's been about a 4-year dollar bull market. Those things don't end with a whimper generally, they end with a bang. We're probably seeing that in dollar yen right now. But, I think eventually the US economic data will turn lower, but I think it might be happening quicker elsewhere. And that would keep the dollar firm. And then even if you have a risk off trade, it will work for the dollar on a slowing globe as well. Yeah, well, that's it. I mean, Ishmael asked, is it very important to have opinions that are different and independent? And it is. Like, once an idea, once they're touting it on CNBC and everyone's talking about it, then it's late in the game. So that is kind of, you have to cultivate your own ideas, and you got to do the work to do that. Show me some of your charts. Do I have that chart screen open? No. Well, I always put my charts up on Forex Live, so that's where you'll find them. Am I already in Johannesburg? No, I will be in Johannesburg though next Sunday for 4 days at the Finance Magnets London Summit, Finance Magnets Africa Summit in Johannesburg in Sandton. If anyone's in Johannesburg, I would love to meet up with anyone and talk about these themes. I'm giving a couple presentations there as well. So yeah, can't wait to get down to Africa, and I'll be in Amsterdam on my way home, which I'm looking forward to as well. All right, some guy early in the copper trade, whether I should stay or exit. No, I don't think I'd get out of that trade, but you got to recognize that your 3x might turn into 2x or 1.5x if you want to stay in. It is one of those things where people are starting to talk about it. I think the leverage in that trade is that there's not much people can do about it. Even like right now, we had a chip shortage or a lot of energy shortage. They can build these things fairly quickly. Getting copper supply into the market it's literally a decade to bring it in if there's a shortage. So that could be if it's 3x already, it could be more than that. How do you deal with greed when in a long-term trade? It's a lot of it's psychological. I think, a lot of times I'll be in just a huge trade, and then you're walking around the neighborhood looking at houses, like, man, I'd buy that house, or something like that. That's usually when you've gone too far, right? You're in this euphoria, right? And you're looking for it not in yourself, but you're looking for it in the rest of the market. Say, it's like when everyone in Bitcoin was showing off their Lambo or talking about it or whatever. You're looking for that collective psychology. And there are a lot of tools now where you can see it. You can, you're reading these things, and you have to read it as almost a distant observer. So you're sort of reading it how other people will read it. So you see all this euphoria or all this fear or all this anger, and you're saying, well, what does that reflect? Does that reflect a market that's too high or too low? And you're reading it, but you don't want to get caught in the emotion of it, because all these people tell you what a great idea it is. Everyone's saying what a great idea is at the very top, and everybody hates it at the very bottom. So you're trying to do the opposite of that. You want to be cautious when you start to see that euphoria, and then you want to be greedy when you start to see everybody hating something. So that's one tool you can use to try to get a sense of whether you should be greedy or less greedy. Widen? Do you think AI could widen it? Yeah, I do think it would. I mean, those US tech companies are absolutely dominating the world right now, and the rich do seem to be getting richer. The books you recommend? A few on my bookshelf there. Greg has a great book, who I work with on the technical side. You're looking at the macro. It's hard because a lot of these books, the rules change in macro and the themes change. So I really think reading the news is kind of a better way to go about it. Though I'm sure that like the classics will be fine, but nothing really comes to mind. What my advice for beginners? Yeah, I'm going to be talking about that in South Africa. My advice for beginners: stay in the game. Just stay in the game, and it gets easier. But as you keep blowing up, you're not going to stay in the game. AI integration and market making, yeah, that, I mean, not something I'm too worried about, but maybe I'm missing something there. How do we know when markets are in risk on or risk off? Boy, that's a tough one to answer. I mean, it's usually the market's going up, but when it's the Federal Reserve drives a lot of it. When the Federal Reserve is easing, it's generally going to be buy the dips. When they're tightening, look out. If inflation does stay higher, what would it be like for major global rates? Well, I think it would be bullish the US because that's where the strongest growth is. To some extent, eventually though, there'd be a lot of capital destruction, a lot of political trouble. But we've seen in the last year how people dislike inflation. And what do I think? Yeah. Anyway, I'm running out of time here. I'll answer these last few as quick as I can. Yeah, danger about war. Like I'd like to say, there's an old expression: what do you do when when you've heard in the news that nuclear bombs are falling? And people will say, well, sell everything, get out of it. Well, my answer is buy everything, because if there's nuclear war, your money doesn't matter anyway. And if the reports are false, you're going to make a lot of money on the dip. I love to say, just let it all blow over. And, that 99 times out of 100 is there isn't going to be a war, and it's not going to be that bad. And I think that's worked a lot. I don't know anything about finding a mentor. Just read Forex Live. And gamma and CTA positioning. Yeah, I mean, like a lot of it that's one way to trade. We're talking about macro conviction here, so I don't know if that's going to give you much of a bias. A lot of the stuff around options, though, now in the calendar are important to pay attention to. Somebody with all caps here, struggling with fundamentals. What should I really focus on if I want to improve my fundamentals? I just read more, and that's it. And don't avoid the doomers. Some of these questions are really broad, gang. Bad rate cuts. Yeah, when is the London Summit? Is in end of November. So I'll be there again. I'd love to meet up. Yeah, you send me a message before then. Rate cuts, I do think they're coming. They're telling you they want to cut. How many years I've seen people become successful. Like I have a nice video on YouTube about this kid who lived down the street from me. He had I think it was $170 into his account, and he made $250,000 in a day. So, some people get successful very quickly. Others, a lot of it's how you're built, or just luck. Markets, there's no magic. There's no easy path. What tools can you use for your conviction? Yeah, things you want to see. Like I talked about positioning. Any kind of thing you can get an edge on how the market's positioned, I think are useful tools. But yeah, I guess I'll wrap it up there. Boy, that's a lot of questions, gang. I'm really sorry the slides weren't up. That was annoying. They weren't that good of slides anyway, I guess. That's all I can say to console you. But I'll work on that. So that's on me for making that mistake. But really appreciate everyone coming in on a Friday afternoon, no less. I know it's late Friday for many of you, but we're gonna have a lot more on like these ideas, and I'm always happy to answer questions. You can join our Telegram group. I think there's some really, really smart people in there, and we figure a lot of things out before the market does. So I think it's worth whatever very low price that we charge to do that. So thanks everyone so much coming in. I wish this was live because it would be so nice to talk with you and answer your questions. But I appreciate it, and yeah, have a great weekend.